The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 7th Jobs Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call health. That's it. You know, on Fridays, we've got a great show. Nico and Paige do a show called Living a Primal Lifestyle. Now on Wednesday evenings from 6 to 7, Mindful Living with Tom and Allie Ford out there. Great, so it's Friday. So it really should all be about our health. Without our health, we've got basically nothing out there, right? So treat your body like a temple, not a woodshed. Our mind and our body work together. Our body needs to be a good support system for our mind and our spirit. Folks, if we take good care of it, our body can take us wherever we want to go with the power, with the strength, with the energy and vitality that we will need to get there. Take good care of your body. The reason is it's the only place you have to live. Let's go check out the life inside these markets out here right now. Dow futures are up by 64 points. They're certainly off of their session highs out here. S&P futures up 7.5. They're trading at 1883. NASDAQ futures up about 10 points, trading out at 3732. Our call-in number is 877-927-6648. If you give us a call, I'll be happy to take a look at your stock charts, answer whatever questions I possibly can. Right now in the market here, is this going to be a pop in a drop? Well, we're going to take a look at certainly our euro-yen currency pair. We'll go see what we can find out here. Right now, gold is trading back about $15 at $13.36. Silver's off 66 cents, down 3% here this morning, trading out at $20.90. Light sweet crude, it's up 53 cents at 102.09. Looks like natural gas back about 3 pennies. A quick peek around the globe. Let me see what we have out here. Earlier this morning, the DAX was off quite a bit. Right now, the DAX is down about 50 points. I think at one time I saw it down close to 100 or so. Maybe it was even more than that, for all I know. DAX right now off 51 points, about 0.5%. FTSE down 10, not a big deal. A little bit of a mixed bag over in Asia last night. The Nikkei up 139 points. That was up nearly 1%. The Shanghai off, it was flat, down 1 point, and the Hang Seng off 42 points, about 0.2% out here. So let me switch tabs out here. Hopefully you're watching us on TigerTV, even if it's on your mobile device. Just go to the homepage at TFNN.com. Upper right-hand side, you're going to see a little button there, 3 little smartphones. Click on that, and you'll be able to catch this show streaming live. Of course, right now, what I have on my chart here, on the left-hand side of the chart, we've got the ES-Mini S&P futures. That's on the left-hand side. On the right-hand side, we've got our friend, the Euro-Japanese Yen currency pair. Now, we're watching here on this 10-minute chart, where we see the big up spike. So as soon as the jobs numbers were released, we saw the ES-Mini trade from a low of about 1878.50 all the way up to a high of 1886.75. Nice move out there. Nice 10-point move. 78, what did I get? What did I say? 1878 to 80. Yeah, almost a 10-point move out there. And what we saw here was the same candle type formation inside of the Euro-Japanese Yen. So you can truly see the correlation. And I don't know that you can really see it much better than this. Now, what we're also seeing, and the one that is the strongest, one that wins the battles here, really is the Euro-Japanese Yen. So we've watched the ES-Mini trade off just a bit, but we have not seen that same pattern take place inside of the Euro-Japanese Yen. And I am watching this 10-minute chart here, obviously a kind of an ultra-short-term point of view, looking to see if we're going to see any kind of reversal. Why would I be looking for that? Well, certainly if you listened in on yesterday's show, you know that ahead of time we draw these patterns. The beautiful thing about the lightning bolt patterns, that's your A to B equals C to E. The beautiful thing about retracement patterns is the market's doing basically 75% of the work for us. It's just simply up to us to identify the potential patterns that are out there, to watch what happens when price hits these areas, and then be able to make a decision. Whether you're in a trade, looking to get into a trade, staying out of a trade, whatever it is you might be. So what did we do yesterday? We've got the Euro-Japanese Yen. truly took off yesterday. Big wide-ranging bar. Haven't seen a wide-ranging bar like that inside this currency pair for quite some time out here. And this morning was just kind of flat, but now it's hit that projected level, the 0.786 retracement, the actual 0.786 Gartley sell. And as I said yesterday, hey, if it happens to hit that, don't just sell it just because it hits that price. You want to watch what's going on. Well, first we have yesterday's candle. As candles go out here, that is, let me just get rid of the color on this here momentarily. I'm going to get rid of the color. This candle here, as far as strength of candles, if out of 1 out of 10, we'll just call it, if 10 were the strongest, that is a 10.5, an 11.0, a 15. I mean, it doesn't get any stronger than that type of candle session. But it didn't make the pattern out here. So when I say it didn't make the pattern, it didn't make it all the way up to that 0.786. That means today's candle is really going to be important. So you can see we're right at that area, 143. I mean, really right at that area. Right now you're trading at 143.69. 143.73 was what I had listed as the completion of your 1-to-1 A to B equals CD to the upside. Now, here's the deal. If we take a look at our A to B equals CD pattern here, out here, we're going to see the 1-to-1 coming in right here, but only a 50% retracement. And with this wide-ranging bar from yesterday and the way that we're hitting it here this morning, if we see a price close above this level here, we're certainly going to see a move up to the 1-to-1.272. That means we're going to see a move all the way back up to the highs on December 27th out there. That should be able to finally take the Dow up to above, at least test the highs of its December 31st level out here. And if we see a reversal, that's why we're paying attention to because it is Jobs Friday, and there can be lots of volatility out here. So we want to be paying attention. We want to be focused, and we'll see it. We should see it occur inside on that 10-minute chart out there. So during the first hour here, the next 45 minutes here, we'll continue to go back and forth and see what it is that we see. Now, yesterday, I also showed... Oops, I don't want to do that. I want to just switch back over here. Yesterday, I was taking a look at Goldilocks with you. I was taking a look at a potential pattern that has not completed and does not look like it is going to complete. That was a 3 drive to a top pattern. That would have required a move up to 1361. Where we saw gold get up to yesterday was 1353 out there. That doesn't really qualify, even though it's only $8 away. It just doesn't give us an expansion. So that just means that pattern didn't set up. That's all. So I'm going to go ahead and actually I was expecting to see a spike high after the jobs report to get up to that 1361. I was willing to give it, one more day, even though yesterday would have been the perfect time sequence in order for that pattern to occur. So what is it that we've got going on here right now inside of Goldilocks? Well, first, we've got gold coming down to the 50-day exponential moving average. Let me get rid of this thing on the bottom here if I can. There we go. Get rid of the time sequence. So right now, the key level to be watching on gold is going to be about 1329.70 would be the exact number. So we'll just simply call it 1330. You're trading at 1336 right now. It's gotten down to 1331. Why is that important? Well, that 200-day exponential moving average has acted as a nice little support line out here ever since it broke through that level on February 24th. So we'll see. That should be a good support area. If it's not a good support area, then we'll start to see some type of retracement. Retracement to where? I'd have to say that the easiest place to be looking for is going to be the trend. And if we take a look at where that trend line might be out here, well, I'll say the channel line out here, it's probably somewhere right in around that as the range. Let me go ahead. I can push this to the back. It probably comes back all the way. There we go. Extend back. Yeah, so I'd say right in around this level here. And if we take a look at retracements just to try to identify, and that is if we see gold break this 200-day exponential moving average, then we ought to see the price of gold pull back to about the 1288-ish range, only a 0.382 retracement. That would be nice. It helps to work off some of this overbought condition out here. Although as we speak here right now, gold is not overbought. It has been making, in essence, higher highs with less relative strength. You don't like to necessarily see that out here. I guess what we would really say about gold is over the course of the last, this is probably the better way, the more accurate way to look at it. Since February 24th, since breaking through the 200-day exponential moving average, in essence, gold has moved sideways. And that is actually more bullish by working off an oversold or overbought condition. In this case here, overbought condition by just simply moving sideways. In essence, that's what it's doing out here. So continuing to consolidate at these highs out here in order to garner some strength to move to the upside. Of course, becomes a slight problem if you see Goldilocks break below that 13.29 level. If we take a look at silver struggling this morning, but what it has done so far, it's traded back to the 0.382 retracement level. $20.95 is that number. You're trading out at 21.91 right now. And with what silver's also done is it's not been able to break above its price channel out here. Not that that's bearish, it's just running into some significant resistance. Ideally, what you would see is you'd see silver come back and, quite frankly, in my opinion, test the breakout. And its breakout was of this consolidation level, and it really occurred on February 14th. So we're trading inside that candle right now. To me, that sets up buying opportunity, and that's if, in fact, what you'd like to see when you break a consolidation, you like to see price come back, test that area, and prove that it is a real break. I do believe it's a real break, and that's why I'd like to see it come all the way back down to about $21.50 or so. Maybe it comes back to 2019, but right now, and we got a chance to do that. In fact, probably has a chance to even do that here today as we speak. Of course, if price closes inside $20 and or $21.50, closes inside the consolidation, that's not a good thing. Because when you close back inside a consolidation, oftentimes you're going to run all the way back to either the bottom or the top. In this case here, it would be back to the bottom, down around $18.97. So one thing at a time. That's what's going on in those two areas. If we go take a look at the daily charts out here for the index futures, let's go see if there's any kind of expansions or anything going on. See what it is that we see out here. Not a ton. Russell 2000. Couple of dojis that have formed here recently. That's not necessarily the most bullish sign in the world. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 70 points right now. S&P up 7.5. And moving in the pre-market out here, Big Lots, BIG is the ticker symbol. Closed last night at 29.25. Came out with numbers. Their numbers go like this. I just had them. There we go. Net income $84 million versus $120. So they're missing the bottom line. Net sales $1.6 billion versus $1.74 out here. So what are they doing? Buying back all their stock? The market is digging this out here. Again, it closed at 29.25. They're trading out at 34.55. Let's go check this out. See where it's trading into. BIG is the ticker symbol. Now the change in trend has occurred here inside of Big Lots. Now where is this going to move to? It's had a big gap down. Let me just refresh my chart, and we're going to start from scratch out here. We're just going to clean everything up out here off of Big Lots. So today it's going to gap up. It's going to take out a B point of an A to B equals CD to the upside out here. We'll have to see what kind of volume is behind this move. But right now it's priced out at $34.57. $34. That's a heck of a move. What the heck is going on out here with Big Lots? I'm just looking through through my notes here, see if I can see anything, see if I'm missing something. I don't see a buyout. I just see their numbers being reported out here. That is all I see. At $34 right here, the top of the gap down from December the 6th out here, the top of the gap down, 34.25, and the last trade just fired off at 34.57. That's a heck of a move. Now, you had a move down with 6.7 million shares out there, so it's going to move into that gap, but that is just what's so funny about this stock chart. If it really were to open, so the high of that gap down is 34.25. If it really does open at 34.57, and that's the low of the session, I don't know that's going to happen out here, but I'm just giving you the if. It would form a huge island reversal bottom out here. So that we'll pay attention to Big Lots. Man, look at the gaps that this thing has. This looks like kind of a suicidal stock chart out here. What the heck, man? This is a psycho stock altogether. Big Lots. Anyway, we'll pay attention. So that's a big mover in the market to the upside. You've got Kihu 360. They closed at 121. They're trading at 124 right now. Foot Locker, FL's a ticker symbol. They were out with numbers. Net income $121 million versus 104. Net sales for their fourth quarter $1.7 billion. Boy, big top line beat on Foot Locker here for their fourth quarter. That's a big top line beat. How about comparable sales? So it looks like we're all buying tennis shoes out there. That was up 5.3%. So that's pretty healthy. Let's go see what Foot Locker, FL again, is the ticker symbol. Let's go see what it is trading into. So this looks like it's near highs, maybe all-time highs. Give me a moment to pull this back. Yeah, it is. Let me put this on a weekly chart. So this thing, give me a moment here. to do this on a weekly chart. Just want to see where this thing is at. Yeah, Foot Locker, all-time highs, and it is going higher out here. Now, Foot Locker on a weekly basis, let's see if this thing here is going. It looks like this week's going to confirm an A to B equals CD to the upside. So on a weekly chart, with regard to Foot Locker, that takes us up to a price projection. Well, the 1-to-1 A to B equals CD takes you up to 46.50, but I don't think so. I would have to say 49.13 is more likely the numbers out there. Let's go to Don in Odessa. Don, thanks for calling. Thanks for holding. How you doing today?
Hey, good morning, Steve. Thanks for taking my call.
No problem. You own any Foot Locker stock or Big Lot stock?
I do not.
Oh,
don't want
man.
any.
Huh? You don't want any?
No. I'm calling about the parameters for Gartley's.
Yes, absolutely.
I'm looking right now at the Euro-Japanese yen deal. You often quote that one as an indicator.
Yes.
Beginning on, let me see what that high point date was.
And are you looking at a daily chart? Or
I am, yeah, I'm sorry.
Okay.
1227 as the X, and then down to, what it was at, the 4th of February as the
Correct.
A.
Yes.
And then back up to the 21st for the B.
Yes.
And you can figure the rest of it. We have to make a 1.27 extension from A, from C to D. Isn't that right?
From C to no. Well, the only requirement, if you read H.M. Gartley's book, and quite frankly, you can find it on the internet.
Oh, you can? Okay.
Yeah, for the most part, you really can.
I'm just wondering how close we have to be to the 1.27, because right now we're at 100, and if we do a 1.27, we'll be 100% from the high.
Yeah, his only requirements, Don, was just simply that there was an A to B equals CD. So no Fibonacci stuff. Can you hold on through the break?
Oh, sure. Go ahead.
All right, we're going to get the market open, then we're going to go back out to Don in Odessa, and we're going to cover for Don. We're going to take a look at H.M. Gartley's work. Great work, folks. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading up 49 points, trading at 16,470. S&P up 4.5 at 1881. Composite up 10 points at 43.62. Russell 2000 leading the charge again. It's up $5.40, trading out at 12.09. Big Lots leading the charge. The upside up $5. Foot Locker right behind them. Fire Eye, F-E-Y-E, leading the charge. The downside off 6.5% off 580. We're going back out to Odessa, Florida, to our man Don. He's asking a question about a Gartley pattern out here. And what I've done, if you are watching us on Tiger TV, remember you can always catch the archive of this show on Channel 9. I've actually posted page 222 out of H.M. Gartley's books, Profits in the Stock Market. So, Don, so I've got that out here because it's the page where we're really utilizing the technique that you're asking about. That is a great trading tool, and if you're watching us on Tiger TV, pay attention to Figure B on the right-hand side, because that really emulates what it is that I believe you're asking about with regard to the euro.
That's exactly
and
right.
the Gartley sell pattern. Is that correct?
That's right.
Okay, so if you take a look at the if you go read the book, get the book. It's a great, you want to have that in your library. But and I'm going to switch from this chart here in a moment, and we'll go to actually take a look at the euro. So Japanese yen. And if we take a look at it, in this case here, you've got a nice big run-up that this is showing. We're looking at page 222 from Gartley's book. And then it makes one big move down here, which he labels as C. Let's not pay attention to his labels. So it looks like there could be a change in trend that would be taking place.
Steve, your page didn't change on my computer. I got a picture of you up here instead of the...
A picture of me. Hey, Alberto, help us out here, would you? So Al will get this posted here momentarily, I hope. Give me the thumbs up, Al, that we've got that out there. One of our viewers here. Okay, there we go. He's got it. All right, perfect. So you've got this run up from the bottom here. What he shows is A to B. That's why I don't want you to pay attention to his labelings out here, because we could really get confused. So it makes a nice run up off of the low to a high, and then all of a sudden you see a move down, which somebody could think, okay, hey, that's a change in trend. And somebody could be saying to themselves, you know what, that's a change in trend. I'd like to be able to get in on that. What he basically said in a change in trend in the marketplace is buy, or what we've interpreted, is to sell the first A to B equals CD to the upside. Okay. He doesn't say it needs to be an expansion of your of a retracement of 0.618 or 0.786. He doesn't say that it needs to be an expansion of swing points between B and C. It's just because we know how the Fibonacci numbers work, just simply whether it's through mathematics, what we can apply to charts. It just is.
I understand that now.
Yeah, it really is. So I just want you to know that in his book, he doesn't refer to. Oh my goodness, I think I just deleted Al. That's going to be a problem. He's not going to appreciate that at all. That's okay. I'll be able to get him back up on the screen. So now what we're taking a look at here, so it just requires you to have the A to B equals CD pattern out there. And in essence, that's what we really have completing here today. You've got an A to, and really perfectly, because the 1-to-1 A to B equals CD takes you to 143.82. And the actual high that we've seen thus far is 143.77. That's, that works for me.
Okay, well, you've eased my concerns here, Ben.
And it's a 0.786 now. Now, the problem, I've eased your concern for what? Wait a minute.
I'm short.
Oh, okay. You didn't take that on my recommendation here just yet, but okay.
No, I didn't. I jumped the gun here by a few days. I'm actually short financials. That's my second question.
Oh,
they're even
man.
higher today.
Oh, man, the sphincter muscle can't feel good right now.
No.
Now, look, here's our problem with regard to this Gartley pattern as we speak here right now. And our problem is this. Number one, we only had a 50% retracement. So let's now move away from what H.M. Gartley taught us, and let's go take a look at the A to B equals CD pattern. And let's take a look at Japanese candlesticks out here. And that candlestick from yesterday is a dangerous one. Dangerous one from the short side, because I haven't seen a candle that large. Well, we had a candle that was almost that large back on December 27th out there. But on December 27th, as it was making its high, it also sold off and gave back about 50% of that. We didn't see that take place yesterday. So that's a danger sign out here. And the other is it only made a 50% retracement. That said that when it was pulling back here, Don, on February 27th, that it still probably has wound up energy. And yesterday's move was one of those wound-up energy things that actually says, you know what, this might just be more than a 1-to-1 A to B equals CD to the upside.
You're stealing my hope, Steve. You're stealing my hope.
No, I want to just answer your question and just, look, you're an extremely intelligent, trader out there. You are, and so I know that you know that this is a game about money management. That's all. There was a guy on yesterday on CNBC. I only caught just a few minutes because I have so many things going on in the morning. His name also was James Diamond out there. The only part of the discussion that I caught, because I guess he's had a very successful track record in managing his fund out there, and the question was, what's the secret? And his secret was simply managing risk. It was really simple. And he talked about position sizing, and I said, I love you. I mean, because that's really what this, and he said, look, we don't really know what trades are going to work out or not. It's all about managing risk when the trades don't work out, and I know that you do that. So I just pointed out here, you've got that nice 0.786 Gartley sell. You don't want to see this thing, get much above the 144 level. If you do, that could be actually turning into a larger pattern out here inside the euro. All righty?
I appreciate it, Steve. Thank you very much.
Hey, no problem. My pleasure. My pleasure.
Have a prosperous day.
All righty, you too, and thanks so much for calling. Have a nice weekend. And no, it was not J.P. Morgan's Jamie Dimon. It was another individual. His name also happens to be James Diamond. And I don't know, that they may have the interview, in fact, posted on CNBC, in their videos or what have you. And I really recommend you. Now, look, I'm going to recommend to myself. Okay, I'm going to recommend to myself. When I do the openings in the morning, folks, when I started doing the radio show, the interesting thing about doing a radio show is the only person you can talk to is the microphone is yourself, right? So at first, when I started off doing the shows, I used to post a picture of my kids, and that was really how I started the thought process. It was one of the reasons I started the thought process and the concept into my morning openings. What message is it that I could give to my kids each day so that they could lead an inspired life? Because to me, that was truly what it all was about. And then what I really then realized was really I'm just talking to myself. I mean, I am talking to myself, and some of you guys, folks, girls, you listen in and And so really when I'm talking about all that stuff, I really am speaking to myself to inspire me to make sure that I'm staying on track as well. And so hopefully, hopefully you can take something from those messages. So that was Don. That was from Odessa. I would recommend going and taking a look at that video if you can find it, from James Diamond, I believe was in fact his name. And what I caught, what I was so important was, he attributed his track record to proper position sizing and risk management. And if you can, and that's really what it is that I preach out here. And if you've ever traded with me, if you've ever taken my newsletter subscription, you know that is the entire cornerstone of what it is that we do out here, because you can't get all of the trades right. That's what this game is not really about, getting all of those trades right out there. And it is all about each of us learning from each other and becoming educated each day. Now, I know that there were some questions yesterday for our man Z in the Tiger's Den, who's busy trading right now. So the questions were with regard to the Euro-US dollar currency pair. So we're going to go take a look at that currency pair out here. And I had posted in the den that if we saw, in essence, a strong close today, this week here, that what we could see is a euro that would move up to the 144 level. Right now it's trading at 138.67. And the question was, hey, how did I come up with that? Why do I say that? So let me give you the reason and the logic. So if you're watching us, if you're following along with us on Tiger TV, number one, you've got the weekly chart for the Euro U.S. dollar. I've been pointing this chart out for months and months and months and months out here. And this is an important chart because this shows a significant both downtrend channel line, which price is above. So that's the first thing that it needed to break, and it has broken that. It has clearly broken that because we've seen price move above that for the last 3 trading weeks out here. And we've also seen price move above that and test that level. And that first time, it moved above it the week ended February 21st out here. And then last week, it actually punched down and tested it and rejected that area. So it has tested a long-term descending price channel out there. Now what it's doing, because of some additional resistance that it has a trend line. So you kind of like a little phantom, anyways, a little phantom area. It's the black line that's going across my screen. That's actually using the emotion, the top of the candle. The body of the candles, the essence of price, the shadows, the wicks, they're just simply nothing more than the emotional extreme to the upside and to the downside during that trading session. This case here happens to be a week. So I'm using that touch point, the very top, going back to the week ended, July 18, 2008. Then I'm using the touch point from the week ended May 6, 2011, and just happens to end up touching the actual high that took place when we saw the euro try to break out of this downtrend. That occurred here on December 27th out there as it got up, as our markets were making their high, as it got up to 138.9. So right now today, in order for the euro, so we know the euro's broken the channel lines. It will have broken the trend line, in my opinion, if it closes above 1.3831 or 1.3866. So a lot of time left in the trading session. Anything can happen. Now that's also a horizontal level of resistance, which was set up the week of November the 1st out there. Big bearish engulfing candle. We've seen every time that price has gotten up to that horizontal level, we saw another bearish engulfing candle on a weekly basis for January 3rd. So strong levels of resistance here, horizontal and diagonal. And that's why a break above this. Now, closing just a few pips above that's not going to get me all, hot and heavy. The heavy part's not a problem. In any event, in this case here, so it really needs to close strong, not weak out here. Nonetheless, we want to pay attention to this. So that's number one. Number two, and this is a unique pattern that I've only found that exists inside this currency pair. If you're watching us on Tiger TV, I've got a bunch of yellow boxes. All those yellow boxes identify significant turns in the Euro-Japanese yen for a period of time. Now, anybody can draw that. However, what's interesting is all of these turns take place around the same time of the year. In fact, all but one, going back to 1986 or something, I think that I went back to, was it 1998 at this stage out here. So going back to 1998, because I got enough sample sizes that only once did it not work. And that was back here in February of 2000 and 2003. And all of these yellow boxes right around the between the end of December and February, the euro tends to mark a significant price point level. And so what do we think we have happening right here with this breakout? If you come back and you start taking a look at this weekly chart, you're coming back into the January 24th, the January 31st, the February. We're right here, right now, is in fact where, if this same pattern continues to hold out here, and there's no denying that pattern. Look, at first I thought it might be these highs, because on December 27th when we made the high, I said, okay, that's where we're at. That's probably a high based upon this pattern. However, there is this rising price channel that also is coming off of the lows back here in August of 2012, and therefore this rising price channel now breaking these descending price channels and so forth. This says we might really see a change in trend taking place inside of the euro. Yeah, people wanting more euros than U.S. dollars. Go figure. Look, to me, this is nothing more than just trading the chart patterns out here. Let's be agnostic with regard to our beliefs about fundamentals or anything along those lines, because let's just assume that the stock patterns out here are the most fundamental element. Well, if you go back to the swing point low, which took place here on the weekly chart that I'm using, which is back in August of 2012, and you go all the way up to the high that occurred back here in February 2013, and then your swing point low back on July of 2013, your 1-to-1 A to B equals CD just takes you to 144.2, and that is where the 144 number comes from. Now, if you go ahead and you take from the swing point high, which acted as resistance back in May of 2011, all the way down to the low here on July 27th, what you're going to see is the 0.786 level in that case here, because this would now also be a break above the 0.618 retracement level for the euro-US dollar. It says that you move up to the next level, and that happens to be 1.4322. So somewhere between 1.4322 and 144.2 is a likely landing spot for the euro out here if we see a strong close. Likewise, if we see it close back below 1.3831, that wouldn't surprise me out here. If we actually see that, well, then the resistance, that horizontal resistance, the diagonal resistance, has held, and we'll just simply have to wait for another signal out there. So that's on the euro-US dollar. Sorry for that complete explanation, but it is helpful out there, and quite frankly, you can use it for every other chart pattern out there. Let's go check in on the pop and drop out here. Right now, S&P is up 1 point. The Dow is up 39. I guess we'll have to take a look at that chart here when we get back in just a moment. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow is up 35 points. The S&P is flat here. NASDAQ leading the charge to the downside. It's off about 19 points. NDX 100 off 16 points. The Russell is slightly flat, down 3 right here. Gold is off $18. Silver's down 71 cents. It's off over 3%. Now, we're taking a look at the NQ. This is going to be a pop and drop. I don't know just yet. It is looking that way at the moment, but if we take a look at the NQ, since that's leading the charge to the downside out here, what I've got on my screen is I've got the 30-minute chart. So we're going to see just what the bulls are able to muster up here, if anything at all. We've seen the bears mount a charge off of these highs out here. And if we take a look, if you're watching this on TigerTV, you probably can't see it that clearly. In the den, you can. If we take a look at coming off of the swing point low, 12:30 in the afternoon, on March the 3rd. That low out here inside the NASDAQ futures, the NQ, 36.37. If you go from that low to this morning's pop, to this morning's high out here, it gets you up to the level of 34.70.50. Price obviously also, not obviously, but what price did was it got into the overbought territory of that 14-period relative strength indicator. If you go from that low to the high, you're going to see we're at a 0.382 retracement. Should be support, especially in a strong bull market. No way to argue that we have not been in a strong bull run out here off of the February coming out. In fact, very strong bull run just off of the February lows. If you come from a swing point inside the NASDAQ futures at about 11 o'clock in the evening on March the 3rd, that low out there is 36.71 and a quarter. If you go from that low to this morning's high, you're going to get a 0.618 retracement out there. So we've got two Fibonacci retracement numbers coming together at the same time, and that's at the low that so far has been put in. So this is an area here for the bulls to prove that they've got some legs. The low so far right around the 36.97 level. You're trading at 3,700 right now. So that's what's going on inside of the leader to the downside, and we're going to be paying attention to it now as the weak area for some type of indication as to what's going on. Inside the Dow, which has taken over the actual leadership role, What the Dow has done thus far, and this is a 30-minute chart that we're looking at, it's come back all the way to the breakout, right? If we were teaching you how to buy a breakout, we would say wait for price to come back to the breakout area. Well, the breakout candle was on the 30-minute session, was one between 830 and 9, big wide-ranging bar to the upside. What has the Dow done? It's come back to the low, 16,432. It has since bounced off of that low. If it closes below, and at that breakout session, by the way, if you just take a look at a line and just draw it across the screen out here, I'm looking at the top. So you got really two breakout bars inside of the Dow futures. You've got the one from March 6th at 10 o'clock, between 9:30 and 10 o'clock in the morning, because it's a 30-minute chart that we're looking at. Nice big wide-ranging bar. The top of that, if I just draw the line across the chart out here, we see this second breakout session that took place this morning between 9 and 9:30 against the futures contract that we are taking a look at. So prices come back to that area. Look, folks, you get below this breakout session from 10 o'clock in the morning on March the 6th. That price is $16,386. I can almost guarantee you it was a big pop and a big drop, and would say, hey, Don in Odessa, nice trade out there. He's got his shorts all ironed up and on. And then we go take a look at the, let's go see what do we have out here with regard to the euro. So the euro, what's the euro done here thus far? Euro's not so sure it wants to join this party. The euro, you'll see inside, we took a look at the Dow on the 30-minute chart. Here's the euro yen on its 30-minute chart here. It trades below 142.96 out there. That would be below the breakout session. So far, what we've seen inside this currency pair is only not even a 0.618 retracement here thus far. So be careful. Stay tuned. The Nadex Bull Bear Binary Option Hour is up next with Tom O'Brien and Daryl Martin. Folks, thanks so much for joining me this morning. Have a great weekend, a fantastic weekend. I look forward to seeing you bright and early come Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.